Hello everyone, this is the pre-market report video for today 20th March 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Yesterday in the things to look out section, we discussed about the importance of the Japanese central bank interest rate decision which was scheduled to release just before our market opening. So as expected, after 17 years, Japanese central bank increased the interest rate from minus 0.1% to plus 0.1%. So no surprise there, it was an historical event. In addition, Japanese central bank abolished the yield curve control policy. Unlike US, always Japan controls the yield curve within their target. Before December, the target was just plus or minus 0.25%. And on December, they widened the band and increased the target to plus or minus 0.5%. which itself at that time created the sell-off. Yesterday, they completely abandoned the control policy. This created the sell-off in all Asian market other than Japan, since the purpose of the move is to move away from easy money policy, which will affect all the Japanese companies who plan to invest in other Asian countries. Hence, it also affected the Indian market, and that's the first negative. Second, Monday night US market closed positive, but yesterday morning US future market crashed, especially Nasdaq, which was down over 1%. Here I don't have price action of Nasdaq future due to some error in laptop I guess, but I compared the Nifty with the S&P 500 future price action. As we see, during our Nifty trading time, S&P 500 future market dropped around 0.6%, so that's the second negative. Then this promoter sell-off of TCS stock for over 9,000 crore rupees, which dragged down the whole IT sector, and we know IT sector is the second largest weightage in Nifty after financial, all pushed down the Nifty yesterday near to 250 points down. Sector wise, almost all the sector was down. FMCG, Pharma, Media and IT were the major losers. Each of them dropped over 2%. Institution wise, surprisingly, both FII and DII were net buyers. Possibly they might bought all the 9,000 crore rupees worth of TCS stock. But still, number wise, FII net bought for 1,420 crore rupees, whereas DII net bought for 7,450 crore rupees. Together roughly also comes near 9,000 crore rupees. So if we subtract the TCS factor, then both FII and DII haven't net sold or neither net bought. Possibly yesterday's sell-off might be just the knee-jerk reaction for all the global and local factor. So most probably it might recover either today or tomorrow. Let's see. Moving to US, in addition to the negative global cues, both new building permits and new house construction starts macro for February month comes as very strong number which market don't want. Hence, all three major index in US market opened around 0.5% lower. But again, due to the supply concerns in Russia and Iraq, oil price increased to multi-month high value, which in turn made the all energy related US stocks very positive. Just for info, at the time of this video, WTI crude trading around $82.5 per barrel and Brent crude trading slightly above $87 per barrel. In addition, again there was an AI related stocks rally, and the short covering before today's Fed interest rate decision all made the US market again to close on the positive side. Because of energy stock positivity, Dow Jones increased 0.83%, S&P 500 up by 0.56% and Nasdaq also up by 0.39%. In case of VIX, for 3 trading sessions, it dropped to below 14 from around 14.5. Again, yet another day, US market positivity was not transferred to Indian GIFT Nifty. Early morning today, it closed at 21,899. Equating it with spot market, it's indicating flat to positive opening. Regarding Indian ADR, in line with the Indian market, both IT stocks closed negative. So I won't say there is more fresh negativity. It just followed the yesterday's Indian market. But surprisingly, in Indian market, both ICICI Bank and HDFC Bank closed flat to positive. But in ADR last night, it closed negative. Especially HDFC Bank was down by 1%. So those were the things happened yesterday and last night in the global stock market. Now let's move to new India related info which might potentially influence the market today. First of all, yesterday RBI released their March month monthly bulletin. If anyone fancy reading fully, I will attach the link in the description. Please have a go. Mostly it's positive. Indian economy is expected to grow near 8% in 2024 financial year, and in last month on the spot market, RBI bought roughly near $2 billion US dollars, which means there is a surplus dollar inflow into India. And on the negative side, they did mention that the private final consumption is low and the FMCG sector expects to grow very moderate kind of. I mean, I don't know the exact time of this bulletin release. Possibly if they already released this during the market time means, then all this might already factored in the price action. Second, again from RBI data, Indian banks' liquidity deficit increased to 73,000 crore rupees, and this March month GST payment outflow expect to increase the deficit further, and already this liquidity concern started to impact 5 to 10 basis points in the net interest margin based on the respective bank. Third, yesterday we discussed about the Adani US government probe and the Adani clarification. Yesterday evening in the aftermarket hours, Adani Green Energy released another statement that they are aware of the investigation but they denied any relationship with that entity. Honestly, looks like every day they are making up something and firefighting. Not sure how market will take this today. Finally, REC board approved the third interim dividend 4.5 rupees per share. So that stock will be on focus, and HCL Tech announced their partnership with a company called Cast to manufacture the customized chip, which looks like positive to me. So HCL Tech stock expect to be on focus as well. As a summary, US market closed positive, but that doesn't mean the global momentum is improved now. Today early morning before our market opening, China's interest rate decision is due, and there are some Chinese property market concerns now that the government is planning to allow the insolvency company to bankrupt kind of. If so, that can influence our market. Anyway, for now, GIFT Nifty and Indian ADR indicating the flat to positive opening. If there is no Asian market negativity today, then more possibly we can expect the short covering. But please be cautious. Further sell-off can't be ruled out. Yesterday, among the individual stocks, volume spike of more than 300% was seen in Indus Towers, Exide Industries and Z Entertainment. Then the short build-up was in Colgate Palmolive, Gujarat Gas and TCS, while the long build-up was in Bajaj Auto, Jubilant Footworks and TVS Motor. Regarding the things to look out, early morning before our market opening, China's interest rate is due. Then during our market hours at 12:30 p.m., UK consumer inflation and Germany's PPI inflation and Europe's consumer confidence data is scheduled to release. Finally, for US market, very important, Fed interest rate decision, Fed chairman press conference and crude oil inventories are some of the items we need to keep an eye out today. Coming to technical, Nifty opened 100 points gap down and then hit the intraday low of below 21,800 and finally closed around 21,800, which is the lowest closing level since February 13th. Thus, on the daily chart, Nifty formed a long bearish candlestick pattern with above average volumes. I mean, if you see the past few days Nifty candle together, it has broken down from the wedge pattern, suggesting a potential reversal of the uptrend. Additionally, Nifty fell below sloping support trend line, 50-day exponential moving average, and the RSI value had a bearish crossover, all indicating increasing selling pressure and weakening momentum. So now the immediate support is at 21,800. A drop below 21,700 could lead to further correction in Nifty, and given the present nervousness, 22,000 expect to be the key level and resistance. In case of Bank Nifty, it continued a downtrend for the 8th straight session, but it was remained within the previous day Monday trading range and finally closed at below 46,500. Thus, on the daily chart, Bank Nifty formed a small-bodied bearish candlestick pattern with upper and lower shadows, which resembles the doji sort of candle, indicating ongoing indecision between buyers and sellers. Hence, the key level to watch is at the support at 46,000 and resistance at 47,000, where the highest put and call option open interest are concentrated. A breakout beyond this range will provide the direction. Then, as per the weekly options data, the maximum call option open interest was at 22,000 strike, followed by 22,500 and 22,200 strike, with meaningful new call option writing at 22,000 strike and then 21,900 strike. Whereas on the put side, the maximum open interest was at 21,000 strike followed by 21,800 and 21,400 strike with meaningful new put option writing at 21,400 strike and then 21,800. Thus, from the options data also, 21,800 is expected to be the immediate support and 22,000 is the resistance. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I am doing this for me and viewers educational purpose only. Thanks for watching.